think it's sort of the perfect solution they came up with. Let's put 10%. Let's go ahead with it so they know we're real. Put 10% in $200 billion. Take them out of the ballpark in terms of what they can retaliate with, and then hold the 25% over and above them. So the thinking is, in the size of the economy that we have, who can't handle the 10%? So they're looking at the market appropriately, I think, is looking at that as a solution. I've missed the move in Caterpillar. I missed it in Deere. But then as I look at it, I say, it hasn't moved all that much. It's been flat Deere and Cat basically over the last 6-7 months. So I continue to be in technology. I'm loving my B of A, which I added to a few weeks ago, perhaps early. Love Citi, and I'll stay there for a while. My decision on Citi now is I have about a $74, $75 price target on what do I do? So I'm going to leave that to the side because what's been stealth here, and I mentioned it early in the week or last week, what's been stealth is the 10-year breaching 3%.
Yeah, market doesn't care about that. I mean, it's not
doesn't
ripping
care about
the
it
upside,
at all.
nor should it. I mean, it's representative of where we are, right, Meghan, in the economy. Economy's good. Why shouldn't Fed's going to raise next week?
That's right.
Why shouldn't rates be rising?
There's some argument that the 10-year actually needed to catch up to some of the solid economic data that we've been seeing. And when we look at the market, we actually really like what we're seeing. You talk about market leadership, and it's been maybe a more narrow market than we would otherwise like so far this year. But watching the S&P 500 equal weighted index also climbing, approaching all-time highs, not quite where we are in the cap-weighted index, but the fact that we're seeing the equal-weighted index indicates that we're getting a broadening of leadership. So we like what we see in terms of trade. It is important to watch. The market shrugged it off a little bit so far this week, so maybe some of that was priced in already. But, you know, all eyes are on China, but we actually think it's really important to be paying attention to what's happening with Canada today, because that's, in our view, a critical first step toward resolution of the China trade dispute.
Joe, Meghan talks about this, you know, maybe broadening rally. Tech this month up 3%, discretionary 3.5%, materials, healthcare, financials, industrials, all doing good.
Yeah.
They're all doing well. And you have and maybe some of that rotation from tech into these other areas of the market has made a healthier market and a healthier rally.
Clearly it has, and we talked about looking at a little bit of a modest pullback in technology and not pretending that to be an S&P 500 correction, because it is not. It is really the narrowing of the gap, a multi-decade gap between growth and value. And you're seeing those names come around once again. I love the fact of how broad-based this rally is. If you look at consumer staples today, consumer staples are the second leading sector in terms of performance. Again, very broad-based. And go back to the opening comments that Pete made. I do think a lot of this is about financials. I think we will, as I said the other day, take out that 312 high. We'll probably march towards 3.25. It's indicative of solid economic growth. And I think when you're looking at financials, we continue. Financials lull you to sleep. They take a little bit of a move higher. They consolidate. People begin to say, you know what? The financials are going to roll over. And then 3 months later, they come higher once again.
I mean, they make you like Rip Van Winkle. You sleep forever and you finally wake up.
No, but if you look at them on a longer-term basis, financials continue to hold an uptrend. They just don't do it with the velocity, as Pete said before, of what you're going to see in technology. But there are names, Blackstone, KKR, these names are performing incredibly well. Like Stephen, I added to Bank of America. I think you're going to see financials in the next 30 to 60 days continue to appreciate.
You know what's so interesting here is that a year ago, 2 years ago, 3 years ago, pick any time frame longer than 6 months. If you had said this market's going to reach new highs without Google reaching a new high, without Facebook reaching a new high,
without even Amazon,
exactly,
or Facebook, yeah, like you
right,
say,
Amazon's closer. So that's what's new, as you point out, Meghan, about the breadth of the market.